Hi, Tom.
Hi.
Welcome to the advisory board for the Africa Hotel Investment Forum, and thanks again for doing one of your superb presentations. Last time we met was in Rwanda, where we heard some really interesting things about the market there and the region. Now, today you presented some really interesting facts, which I guess if I were to pick up on two or three major things,
Sure.
I think the first interesting was that the generic data out there showed a increase in RevPAR, but a pretty sort of move down in occupancy. What do you make of that, and what's happening?
Yeah. Well, you're right. I mean, the increase in RevPAR has been pretty good now for the past 6 years across Africa, and really since the Arab Spring. So going back to 2011, there was a big downturn due to the situation in Egypt and across northern Africa. Since then, we have seen that pick up, and it's really been driven by average rate. So hoteliers pushing rate across many markets, and that's where we saw just over 10% growth in 2016 in average rate terms.
Right.
So that's positive. Occupancy, yes, was down slightly in 2016. Supply is relatively flat, so it's not actually a supply-driven decline, which is often what we see in particularly in developing markets. Supply starts to increase at a fast pace, and demand isn't keeping up. But we actually saw a demand decline in 2016 across Africa. And I think when you look at it as a whole, obviously, as we've talked about previously, it's difficult to do so because Africa is very diverse, many countries. But I think there are a few factors. We do have economic instability across a number of countries. There's also political instability across a number of countries. There were so many elections last year in Africa, for example.
And still to come.
And still to come, indeed. And then also there's the safety aspect, safety and security concerns, not just across Northern Africa where they've been prevalent for many years, but if you look at markets such as Nigeria, that occurs as well. So combination of factors, I think. But again, it's looking at Africa as a whole, which, as we've talked about, is quite difficult to do.
Well, okay, so the second piece is obviously starting to break this into at least regions. And your recent data, I know it's still in form, but what I saw there was a resurgence from both South and North Africa, especially with Egypt in some really impressive comeback figures.
Yeah, I mean, if we start in the north, first of all, I think in 2016 anyway, there was a little bit of a differential between predominantly corporate markets and leisure markets. So if we look at Egypt, for example, Cairo was up, I think, 35% in RevPAR terms. Sharm was still down significantly. So people still concerned about their safety, their security when they're heading to Sharm. But the corporate environment seems to be recovering a little bit. Similarly, if we move across the Maghreb to Morocco, we saw a similar situation, albeit far smaller numbers, but we saw growth in Casablanca, and we saw a decline in Marrakesh. So again, that corporate leisure split, I think, quite evident. If we go down to the south of the continent, if we look at South Africa, had a really quite a good year. The weak rand is absolutely helping.
So that's critical to...
Absolutely. It's a really affordable place to go. You can go down there, stay in exquisite hotels, eat exquisite food, and not break the bank. And that's going to be attractive to everyone. And leisure especially is benefiting. If we look at Cape Town, 21% up in 2016, very strong. But then also South Africa benefits from strong corporate demand, strong MICE demand. It has great conference facilities. So overall, that market, coupled with the fact that supply growth has been pretty limited, certainly since the 2010 World Cup, it's a recipe for a decent performance across that country at the moment.
And I sort of picked up in the Sub-Saharan bit, the SSA, if you want to call it that, the middle bit or whatever, that actually that's quite topsy-turvy. Is there anything that you can actually glean from that data at the moment?
The one thing you can take away, I think, is that every country and every city is completely different.
Yeah.
It really is. I mean, if we look at Western Africa, if we look at Accra, we saw a significant double-digit decline last year.
Yeah.
Now, that's economic-driven, it's supply-driven. Moved to Nigeria, we saw a decent increase, but that's coming back from a few years of challenging circumstances. Likewise, if we move east, Addis suffered a lot with new supply, particularly in the high end coming in. The state of emergency in Ethiopia, that's that makes it a difficult situation. Nairobi, which has had difficult years recently, security some would say oversupply, but a lot of supply coming in, actually was fairly static, had a small growth. So again, very, very different. And then if you move that little bit further south, you've got currency fluctuations really affecting things in markets like Lusaka and Maputo. And then you've got declines in Gaborone, supply-driven. Harare continues to struggle, just the ongoing economic situation across Zimbabwe. So really very, very different pictures across each country and each city, across that sort of sub-Saharan region, as you call it.
I suppose a final thing that I gleaned from this short presentation was how over the years, we're talking sort of over only a short period of time, 3 or 4 years, we've actually seen a gradual increase of branded hotel rooms into these countries which have had either none or one branded hotel in them. And what sort of numbers are we looking at there?
For sure. I mean, I first started looking at this back in 2014, so we're only looking 3 years ago. And one of the things that really interested me about the African market was the opportunity, as I saw it, and the fact that there were so many countries, so many cities, and cities with, well over 1 million inhabitants, where there was very little supply and practically no branded supply. And when I first did the analysis, so 3 years ago, there were 12 countries across the whole of the continent with no branded hotels whatsoever, and a further 6 which only had one African hotel brand present. Fast forward to today, so to 2017, there are now 6 countries, only 6 with no brands whatsoever, and a further 4 with only African branded hotels. So it really does show, yes, in many markets we've seen brands come in. We've seen that recently in South Sudan, in the Democratic Republic of Congo, in Mauritania. So in markets that wouldn't really usually tip off the tongue as such. So we have seen that moving forward. We do also have pipeline in Swaziland. Hilton are developing there. We've got Marriott and Rotana in Mauritania as well. So we're going to continue to see that development, and I think it will. These last few, nothing's immediately going to come, but we've certainly seen over recent years the development of the branded hotel market across the continent.
From that perspective, the data's only going to get better and deeper.
Well, let's hope so. I mean, certainly branded presence doesn't do STR any harm, but as I've said previously, we're constantly out there talking to independent hoteliers, educating them on the benefits of data sharing, how they can benefit their sales, marketing, revenue management strategies, and ultimately it helps the whole community, more transparency, more willingness to invest, and so on and so forth. So hopefully more data.
Couldn't agree more. So okay, well, thank you, Tom, and
thanks, Matt. Nice to see you.
See you in Kigali.
Indeed. All right.
Thanks.
Thank you.
Bye-bye.
Cheers.